What's up, guys? Eric here, Mr. Fired Up Wealth. Just want to do a quick video, something fun, something different today. I'm actually going to create a little portfolio here on the slide spelling out Fired Up Wealth. So we're going to use the letter, each letter, and we're going to pick a stock. So for F, there's going to be a stock pick. For the W, there's going to be a stock pick. Let's see if you can guess which stocks I'm going to pick. If you've been following the channel, if you're perhaps a Patreon member, you probably have a good idea what these stock picks are going to be. If you're new to the channel, or if you haven't subscribed, definitely do. If these type of stocks are down your alley, you're definitely going to want to subscribe to the channel. I've got videos on all these stocks on the Fired Up Wealth YouTube channel that will go into more detail if you want to do more due diligence. This is just a high-level, quick video. You know, there's 13 stocks that I'm going to pick here, and if I went through and did due diligence in each one, we'd be here for hours. So I'm just going to give you the stock and just a quick reason why I like it. And if you want to do more homework, definitely subscribe. Check out the other videos on the channel. So up first, we've got the F. You probably already know what this is going to be, right? F for FSLY. So FSLY, we've got CDNs. They're also trying to get more into cybersecurity, compete with a Cloudflare of the world with DDoS type security. It's, you know, one of those stocks, it's a high flyer. It goes up, goes down. In this range, if you can get it, you know, $70, it's probably a decent opportunity long-term. Just be careful with stocks like this. Don't chase it when it's way above the moving averages. I for IPOE, that's SoFi. I want to do a video that's just focused on this one as well, and I haven't gotten around to finishing it, but I think there's a huge opportunity with this SPAC. The thing got beat up really bad here over this last correction, and some of you probably got it at a price that you might not have ever imagined you would have got it at. So definitely was a good add on this recent correction, and I do have a decent sized position of IPOE. I've been buying it in Discord. R for RingCentral. This was a buy in Discord last summer. It's a great company. I think there's a lot of room for growth, especially on the European side. So obviously I like Zoom Video. I also like RingCentral. Somewhat of a competitor. They do different things, but I think this entire space still has a lot of legs. I know a lot of people are afraid that post-COVID, these companies won't do well. I disagree. I think there's a lot of future in hybrid type work environments. E for Etsy. This is one I've been buying in Discord as well. The earnings of this prove themselves. If you weren't in it already, you know, it's around 150 P ratio, but some of the best growth, when you look at just the pure growth that you're going to get for the price. I mean, it's expensive, but when you're looking at the growth versus the price of the stock, I honestly think that this has room to go as a stock and as a company. I don't think it's just a COVID play. I think this is a sticky type business. It's a very niche type thing, and they've grown their community to millions more users, and I do like this one long term. D for Datadog. You already know I like this one. Check out my top 5 picks I did back in November 2020. Datadog was on that list. So we've got the FIRED completed, F-I-R-E-D. And if you don't know what FIRED actually stands for, it's Financial Independence, Retire Early with Dividends, Passive Income. So what has the U been buying? Unity thing has been beaten up, went from $175 all the way down to 85. It's trading right around 99, 100 bucks right now. You know, I definitely think it's still expensive, but there's opportunity there. When I started buying Unity after the earnings, I told everybody in Discord, definitely watch out. It could go to 80 bucks or even lower, and it hit that range. I think there's a good chance that it kind of bottoms out and maybe it retests that range, but I don't see a ton of downside after $75. I had a dream about it the other night. It went to $75 and I was like backing the truck up. So I've got about a 1% position in the portfolio. I'm willing to go up to 2% on Unity. If it goes down, I've got room to add. If it runs up from here, high quality problem to have. So Unity is the U. What do you think the P is? P for Palantir. I think I was one of the first people to do a video on YouTube on Palantir. You know, it was a buy at $10 or under. That's where the direct listing started. It ran up to $40+. I was telling people it's probably a $25 stock. Now, I do like it. Don't get it twisted. I am bullish on Palantir. I bought Palantir at $9. I think it's a great long-term opportunity, but I do think it got ahead of itself and was due for a little bit of a correction, which is why it came back below 25. I think if you can get it 25 or less, you know, it's probably an opportunity, but know that this kind of stock can have volatility as well. So Palantir is the P. So now we've got fired up. We got to spell wealth. So what's the W? Been buying this one recently as well on the drop. This is going to be Wingstop, trading right now at about 120 bucks a share. Definitely be careful with this one. It is a high PE type stock, very expensive. They're trying to be like the next McDonald's, and you think of wings, it's healthier. There's a lot of people that are really into chicken, and it's a simple menu. If you go in there, they've got a really good, high quality product. I think, in my opinion, the staff is always nice. It's always clean and friendly, and they really have a simple menu, and it's easy to scale that. The more they grow, the larger they become, the more restaurants they have, the easier it is to get those wings and the fries and everything they sell at lower cost and basically increase their profitability and margins. I think Wingstop has a lot of room to run, although, it has come back a lot. It easily could go to $100. So that's why I like the dollar cost average, but I do like it even at 120 bucks, knowing that there could be some downside. And if it went down, you might want to add some more shares to dollar cost average. E for Elasticsearch. If you watch the Phaser video on the channel, Phaser, that's FSLY, Appian. See if I can remember all these. Z for Zoom, E for Elastic, and R for Roku. That's Phaser. That was a motley fool acronym, and Elasticsearch is part of that. I do like the company. It's somewhat speculative. If you're not familiar with it, check out the channel, watch that Phaser video. You can do a search for Fired Up Wealth Phaser and find it. A for Amazon. Anybody that has been following me for a while know that I've been bullish on Amazon since $500 a share. Still bullish. It's the largest position in my portfolio. It's been trading sideways for 6 months, but I still like the opportunity with Amazon. Amazon Web Services is a cash cow, and they've got a lot of opportunity ahead of them. So Amazon is the A. So what do we have next? The L. What would L be? Lockheed Martin. A great DGIF type stock. It's been beaten down. It's attractive, around a 15 P ratio. It pays you a 3% dividend or more. I think it's a high quality blue chip. A lot of people think that these aerospace and defense stocks don't do well under a Democratic presidency, but I disagree. I think these will continue to improve. I think it's a reasonable valuation. It's not a hyper growth stock or anything, but a solid blue chip. And I like having a little balance in the portfolio. So Lockheed Martin is the L. That's LMT is the ticker. What is next? So T for Tesla. I bought Tesla back in July. Remember, I made a video on buying $20,000 in Tesla, and people said I was going to lose all my money and my wife was going to leave me. It worked out quite well. Since the time of that video, what are we at right now? Obviously, it's come back a lot, but even with the pullback, it's still up 125%. I like the company long term. It's still a large part of the ARK ETFs, and I think Tesla can go higher. I know it's crazy expensive. If you're a value investor, it's really hard to put a price on it. I get it. It's 1,000 PE. It doesn't make any sense. I get it, but sorry, you got to understand how these retail cult stocks are, and there's always going to be buyers at a certain level. Now, when people were trying to buy it at $800, I was saying, hold on. This thing's way above its 200-day moving average. Wait for it. It could come back as low as 550. People laughed at me. It literally came down to 560 bucks the other day. So you have to try to buy on those technical levels. Buy when stocks come down to those 100-day and 200-day moving averages. Don't chase stuff. No FOMO. So what's left? What would the H be? Honeywell. Honeywell, a nice blue chip conglomerate type stock. They're in more technology than you would think. Do some due diligence on Honeywell and you'd be surprised just how much stuff they have their hands into. So looking at this, again, you got FSLY, you got SoFi, IPOE is the ticker, so a little bit of cheating on that one. RingCentral, Etsy, Datadog, Unity, Palantir, Wingstop, Elasticsearch, Amazon, Lockheed Martin, Tesla, and Honeywell. Not only is this, in my opinion, really good growth, it has a few DGIFs in there, Wingstop, dividend growth investing for fired, some Lockheed Martin, some Honeywell. Pretty rounded too. You've got, with me, you're always going to see a lot more SaaS and software type plays, but FSLY, kind of in that whole bucket. SoFi, those more, banking, fintech, RingCentral back in that whole software as a service type model. Etsy a little different because now you're kind of getting more into retail e-commerce. So it's a little bit of a diversity from those other ones. Datadog now back in my wheelhouse with the SaaS plays. Unity, that's its own kind of play in that gaming space. You think augmented reality, virtual reality, it's going to be big in those spaces. And I like stocks like Apple for that reason as well. I think AR and VR are going to be good opportunities in those spaces. Palantir kind of back in the wheelhouse, but it is more in the government. They try to do more in the commercial, but they really, that's what they're known for is really doing those government and defense type projects. But kind of back in my wheelhouse. Now you got Wingstop, you got food. What's not, who doesn't like some chicken wings? I know I do. It's my vice. Elasticsearch back in that wheelhouse. Amazon, it kind of has the AWS of the cloud, but it also has much more on the retail side. And you think of drone delivery, autonomous, there's a lot of future, I think, with Amazon in different spaces. Lockheed Martin, aerospace and defense, blue chip. Tesla, you got your electric vehicles, your solar, and you got Honeywell. A very diverse company that covers lots of different areas, kind of an industrial conglomerate. So is it the most balanced portfolio in the world? No, but I think it's a pretty cool looking portfolio. And I think a lot of you probably like a lot of these stocks. If you like this kind of thing, you like these kind of stocks, subscribe to the channel if this video is entertaining. If you got anything out of it, throw me a like, drop me a comment. I appreciate your time and attention. I hope you have a great rest of your day. Take care.